The Hedgeless Horseman here. It's the 20th of February 2024. First of all, thanks to the sponsors. Second of all, let's look at markets, commodities, mixed. Some up, some down. Markets overall down a bit. I get Nasdaq seems to be taking it on the chin. Anyway, so main topic of today is gonna be why I think a lot of people make mistakes around bottoms and why. So let's say you knew the market, the bull market started in gold, silver miners, and let's say the metals as well. Even though it's much harder to say, in my opinion, if gold and silver is undervalued, but the juniors are just amazingly cheap. Hence why you see all these billionaires pounding the table. So anyway, let's theory craft a bit. Let's say there is 6 months. You knew that the bull was going to start in 6 months. I think a lot of people would think 6 months, that's an eternity. I mean, in contrary to like Rick Rule, who considers 2 to 3 years to be short term. Anyway, I think a lot of people would feel, oh, okay, then there's no rush really. If it starts in 6 months, I'll just start, I'll get in, the day before, or let's say 10 days before, or something like that. This is gonna be tagging on to my last video where I talked about some of the share prices out there. It's basically a mirage, because there's nobody with any size really that can actually get in at the prices that we're seeing out there right now. There are some stocks, it's like I have stink bids in at a few micro and even some nanocap stocks. There's barely any trading. And in some examples, if I could move the share price by like 10 to, I don't know, 25% with a $5K market buy order. So even if you would think that's like, okay, 6 months away, it's like, oh, I can, get in the day before. That's not gonna happen. Or you can't do that. You can't get these prices in a low liquidity environment. If there's like 6 months until the bull, and the bull can start at any single point in time. I mean, we are at extremes. It's just gotten extremer over the last 6 months. The more extreme it is, the less time any market really tends to spend there. Yes, stuff gets extreme and extremer to the upside, but again, doesn't last that long. Yes, we saw, Dogecoin and stuff like that reach 75 billion market cap. Those exponential rushes didn't last too long before they came absolutely crashing down minus 90%. So we have to be kinda, in my opinion, under the assumption that the market could turn any day, because it should turn any day in the junior sector. And there's simply no way to, if you're late, if it's enough for me, let's say one buyer to move a stock price up 20%. In a low liquidity junior, 20% with a market order, that's one person. When this starts to turn, the 2 people buying, not even big positions, just want some exposures, could be enough to have some of these juniors up like 20-30% in a heartbeat. So you can't really rush in at the lows. It's basically impossible because there's so little liquidity. We're basically running out of sellers as well, because the asks aren't that big in many cases. So you can just think about it. It's like when we might be, let's say there's like 2% of people that know about the sector that are interested in buying right now. Imagine when we get to just 20%. these stocks will be up a lot. If we're talking like 90%, where we would, I mean, or above that even, and even get really generalist investors in. I mean, that's like, 1,000 people after you that have bought in that case, and the stock prices might be up, I don't know, a lot at least. So basically what I'm saying is like, you have to be early or you're gonna be late. If you're early, it means that you're probably gonna look at downside, even more downside. I mean, there's certainly a risk. But if you're late, you miss the big returns. If you're really late, you might get a small return near the highs, or you missed half of the bull or whatever. And what comes after big or small paper profits are big paper losses, because you were closer to the bull. You caught, let's say, perhaps the late stage of the move, like a lot of people who got in 2020. So that's the thing. If you're late waiting for the move to have happened, for everybody to basically be in agreement that we're in a new bull, then you're probably gonna get maybe 1/3 of the returns compared to people who are at least the buys around these levels. And then what comes after is, again, paper losses, big paper losses. In this case, when you're buying at extreme lows, you're risking, assuming the companies don't go bankrupt, you're risking short-term paper losses. But what comes after that are some of the highest paper returns you're ever gonna see. That's how this sector works. This sector has some of the highest, most violent bull runs there is. Stuff goes up 300, 500, 1,000, 2,000% from bottom to top. So again, if you want to be a part of something like that, you obviously have to buy near lows. You have to buy around bottoms. Nobody's gonna bottom tick this sector, so forget about bottom ticking. That's a fool's errand. There's only gonna be one person that does that, and that's over within a minute or something. So you can forget about that. Just getting somewhat close, and in order for to get any kind of sizable position, you kind of, I mean, some juniors, for example, it might take weeks or months, given the low liquidity. If you're really patient and you're sitting on the bid, let's say, not that you necessarily need it, because like I said before, I mean, if you think something is cheap, if you pay up 10% or dirt cheap, if you pay dirt cheap plus 10%, that's not really going to matter. If it doesn't work out, you're going to lose 100% anyway. If it does work out, yeah, you'll miss out on some, but it's not like you're paying 100% more than the current price, or the whatever. It's like 100% over dirt cheap. I mean, that's latecomers who do that. So it would be high time to have stink bids in. I'm very impatient if something is cheap. I almost always just go buy right ahead. There's a lot of people that are more patient than me when it comes to buying. As soon as I think something is cheap and could go up a lot over the next few years, I just start buying immediately. If it goes down, I typically, hopefully, buy even more. That's how that works, because you never know again when the bottom is in. Bottom could have been in like 6 months ago. We just saw what happened afterwards. Okay, they went a bit lower. And yeah, more on this point, like a lot of the micro nano cap share prices are mirages, as in there's no way you can actually get in for real at those prices. Last week I saw a couple move 40% on 4K buying or less. That's what I'm talking about, like 4K. Even let's say a pretty good sized portfolio out there, it's like 4K that might get him 1% of his portfolio in it, and that drove some of these stocks up 40%. You can only imagine when there's not only one guy buying in this sector, because from what we hear, it's like Rick Rule said this as well, that from going to conferences, he's seeing a lot of money on the sidelines. So what he described is that there's a lot of people that are very cheap looking at the sector, but they're waiting for the green light. Apparently, I mean, a lot of people talk about, when the Fed lowers rates. Will that happen? I don't know. When will it happen? I don't know. But again, imagine you have like 2 people out of 100. They're buying right now, and you have, let's say, 98 people that have cash, know it's cheap, but they're waiting, again, because we're impatient, nobody wants to risk any paper losses ever. They're waiting for the Fed to, let's say, cut rates. So imagine what's going to happen in some of these juniors if Fed ends up cutting rates in 6 months, and you have 98 people out of 100 that had sold or weren't buying on the sidelines, all of a sudden show up on the bid in some of these juniors, or I mean in the sector overall, basically. So it sounds like it's consensus that everybody's waiting for the Fed to cut rates, and then is when the bull will start. Well, we gotta get in before that. I mean, basically you're front running what everybody else is gonna do in that case. And okay, it's not a guarantee that Fed will raise rates or that's gonna be the trigger or anything like that. But we know there's a lot of people on the sidelines. We know it's already dirt cheap, so it doesn't matter. And 6 months is nothing compared to, again, the gains you can see in this market. And Rick Rule explains that as well. That given what you're in for, and he said as much about the nickel sector basically, that he believes 2025, 26 or something could be great for palladium, platinum, and nickel. But right now, nobody cares because that's so far away. But when you think about it, it's like, well, I mean, let's say he's right. The nickel market is, and palladium, platinum juniors are absolutely washed out. Let's say within 2 years, let's say nickel prices are up 50%. Let's say palladium is up 50%, something like that. Some of these juniors could be up hundreds of percent. And we're all obviously closer to a bottom than to a top, given that production is shutting down and all that, and demand is pretty steady. So in that case, like when you really think about it, if you find some, let's say a beta stock in some of those metals, for example, and the same goes for gold and silver juniors because they're already cheap, and in gold's case, gold has not even crashed, so it's just cheap, very cheap based on the gold price today. A year or two is nothing, absolutely nothing, when you compare to the returns you can get from these levels when the sector turns, if there's 98 people waiting to buy. And if you're one of the 2 that's actually buying, that means you're front running 98 out of 100 people. You're front running their buying. You know they're waiting for something. You know most have sold out already. So you're again simply front running that, and the way they will see it is obviously that's when they're getting into it. They're gonna start getting into it. They think that's the start. Well, when they're starting, we might be up 100, 200% in some juniors. Before the ones that are on the actual sidelines and watching this sector now gets in. And that's before any real generalists, etc., get in, because they're going to be really interested in this sector once the juniors are up 500 to 1,000%. They're going to love this sector when the juniors are up 1,000%. Love it even more when some are up 2,000%. That's just how it is. So again, you're either too early or too late. If you're too early, there's a risk of volatility, negative volatility, before you get the big returns. If you're too late, you won't get the big returns, and you will maybe hopefully get good or some to good returns, but after that comes big declines instead. And here are just some examples. Like I've been thinking about, I've been thinking about bashing and stuff a lot, or how people work typically in sector in investing, etc. We know everyone is really quick to, as soon as a stock is down or down a lot, people tend to, let's say, pile on and explains like, oh, what a dumb mofo for buying that, or look at this guy, he liked this stock and it's down a lot. It's like a recent example obviously is Condor, and I've had some idiots bashing me for that. But I don't think they have any idea how you make money in this sector, what a high risk high reward sector is. And the fact that's like the whole point of it, and you see this all the time, it's like, yeah, if a stock is down 70%, it takes 200% to get back to even. That's true. That's 100% true, because it's mathematics. But it's also mathematics that the downside is always limited. So if you have, again, it's like 5 stocks, 4 of them crash and burn, down 70%. One turns into some of these, and these are only the ones I've sold, or some of the ones I've sold that turned into, it's like, if I held them for like 2-3 years more, just had patience, like I bought them because they were cheap. I thought they were cheap, didn't have the patience, didn't have the conviction, whatever, found something else. If I just would not have sold these 3 here for 2-3 years, they alone might make up 70% of my portfolio today, because those are how outrageous the upside can be in some of the success stories. Like Chalice, for example, they made an insane discovery. It topped out at 8.16. I think it's down to like $1 or something today. Still a fat multi-bagger, but it's like it's just obscene what I missed out on. And that's one thing also on like how the sector works and how bashers, and since most people don't even never seem to get any big returns because we tend to sell out too cheap or too early in the actual winners. I would bet there's like a 10-to-1 bash to praise ratio. And typically if we're talking, especially if there's an exploration stock where's the, what they say about the markets, like it's a stair walk up and an elevator down. These insane returns typically are produced over years. But let's say a exploration store that missed, or exploration drilling that missed or something, all of those or the immediate reaction, negative reaction, it is immediate. It's like the elevator down. So it's more shock and awe, if you know what I mean. But that's the thing. It's like when some people bash me, and it's like, oh, how can you gotta have zero money left because like you're in high risk high reward stocks. And it's like Condor, for example, which was a big hit, that it's like that's down. It's like, how can you probably don't make any money, all money you made is from sponsors or something like that. It's like the whole idea is that there's a few winners that pay for a lot of others. But that's also the point, that when you see and you get bashed, whatever, it's like people call you a bag holder, let's say, in some stocks, and it's like, oh well, you got to you gotta get 200% from here in order to make it back in that very stock. Again, that's true, but think about how many, if I just held on to these, how many similar size starting positions would these alone have paid for? Take Great Bear. If you started out with, let's see, if you started out with, let's say, $29 over 0.38, if you would have held. It's like you had a 10, you had, or let's go lower. Let's go with $5,000. That would turn into $381,578. And imagine, I mean, how many $5,000 positions that went down 50% could this basically have paid for? Well, we take this divided by 2,500, 152 similar sized starting positions that got cut in half. Great Bear, that's one success story, a fat success story. Would have paid for 152 around that got cut in half. So imagine if you're, let's say you bought Great Bear early. You had 20 positions. One was 5% in each. You had 19 other positions that all failed. You look like an idiot. People are gonna call you a bag holder. People have 19 other examples where they can point out how bad you are, what a shithead you are, that you were bullish on those stories. That's why you owned them, and they went down at least 50%. Great Bear alone, one story out of 20 would have paid for all those and more. That is quite incredible. It's like 76 times 5,000. Yeah, 380%. So that alone would kind of, have your portfolio up 280%. One story, 5% starting position that you held until it got acquired. That position alone theoretically would be worth 380,000. And if you started off with $100,000, you would be up even if the $90,000 invested in the 19 other stories went to zero. Or I should say $95,000 went to zero. That's why basically every basher, and there's like a lot of, let's say, people who've been in this sector a long time, maybe decades, maybe, and I mean geos and mining engineers, etc. It's like there's not many who actually understands how this sector works from an investing standpoint. And you know this. There's like, as soon as everybody, or let's put it like this, everybody wants to see you fail. If you're bullish something and it goes down, people feel better about themselves, and if they don't like you, they're gonna absolutely jump on your throat. But you'll never ever hear from them when talking about something else. Like, I still get Novo thrown in my face by most bashers. I lost money on Novo. You know what I didn't lose money on? Snowline, for example. Snowline more than paid, many actually, many times over what I lost in Novo, and that's what I'm talking about. You don't need an insane hit rate. You're probably gonna look stupid in a lot of cases, especially if it's high risk, high reward cases. And again, let's look at from another, let's say, bashing examples. Like I know there's some people out there who's like, let's say, quick to shit on stories and quick to shit on people if they have losers. And they also shit on some stories that end up becoming successes. But people see that typically as like, okay, he was wrong on this. Let's say, someone was bearish as a junior, where they had the miracle. It's like they became a success, and he was, let's say, right on 2-3 other stories that went down 80%. People say, well, he's more right than wrong. Let's put it that way. So it's like, well, he was right to be bearish this, and this because they went down. First of all, failure is the norm in this sector. Second of all, if, let's say you listen to him talk about 4 stories, he's bearish on every single one. 3 are failures. 3 end up failing, which is not a uncommon thing in this sector at all. But the 4th that you also didn't buy, because let's say he was right on the quote right, looked right on the other 3 that went south, that ends up going up 10x. So he had a 75% hit rate. He looked right 75% of cases. You still lost out. If you would have held those 4, including the ones that got more than cut in half, you would have made money. That is the thing. You always hear, well, it's down 80%. That means that's why this guy is full of shit. It's like condors. Like, well, that's down 70% because they missed that Pucamayo. That's why this guy is full of shit. But you never hear the other side about any other stocks that's like, well, yeah, but if you had the same position in this and whatever, it's like that, this one paid for 5 other that went down 50%, this one paid for 10 others that went down 50%, yada yada yada. That's the thing. So if you want to look smart, you should be a bear, because you're gonna end up looking smart in most cases, and more often than not, because most stores will not be success stores even for a while. But the point is, if you want to make money, you have to afford, no guts, no glory. You have to. There's no way to not take risk if you want, the high reward function as well. That's the thing. But every single basher, I guess they don't know how it works, or they try to pretend that they don't know how it works. Because you'll only typically hear, again, you'll only really hear about the cases that went south, not about other cases that paid for multiple or several of the ones that ended up failing. So imagine how costly these were if you were, let's say, someone let's say told you not to buy them. And like right now, there's a lot of bears out there who hate junior miners. They say you can't make money in junior miners. They have not been able to make money in junior miners, so they say it's no point. You shouldn't even be invested in junior miners. You can, again, in that case, you will also miss out on stuff like this. And I actually bought them because I thought they were cheap. And in some cases, the cases changed dramatically. Chal is basically, I think that discovery came out of nowhere, for example. Point is, if someone, let's say, if you buy something, or many stores that go south, and you have one that goes well, the one that goes well could pay for a lot of the ones that failed. And again, if this was a low risk, high reward scenario where we could find these easily, it's like, oh, of course it's going to go from $14 to $8 or $38 to $29. Everybody would be billionaires by now. They went from this to this and this to this and this to this because nobody knew it was going to happen, that they would have the success they had. I've covered this already. But again, my point is that's like, if you're bad in investing, buy cheap. If you don't want to need a high hit rate, buy cheap, etc., etc., etc. The problem is not that we have big hits. The problem is that some of us don't have any, let's say, that work out that pays for all the rest. And over the last 3 years, that's the point. Over the last 3 years, that's totally logical. Because even the ones that kinda, are going along a good path are even down. That's the thing. But we have to account for that. We have to be aware that that's how this sector works. The flip side is, when we go into a bull, everything will go up. Everything that is still around will go up. So it's been rigged against us for 3 years. We've gotten punished more than we should, right? Even if we're right on, it's like, oh, I think they're gonna hit this and it's probably worth that. It might be selling for 20% of what you think it is worth, even if success has happened. So yes, it's rigged against us, but that's the thing. It's going to be rigged for us later when the 98 out of 100 people actually feel like buying again. And there's been some news out. Magna Mining provides first 2024 drilling results. I missed this copper number first. But it's like, these are some spectacular grades. Let's look at it. Oh, it's okay. I can't see it totally actually. But it's like 2.9 meters, 1.62% nickel, 3.45% copper, 0.03 cobalt, 5.38 grams per ton platinum, 4.39 grams per ton palladium, 2.77 grams. I mean, these are some absurd, and it's not just one off. I mean, there's several incredible intercepts. It's like, I mean, the nickel alone is worth, well, I don't 100% know how this is worth right now, even with depressed nickel prices, but it's like 8.3% copper is bonanza, 13.9% or grams per ton platinum palladium AU, that's high grade, and 1.1% nickel, that's fairly high grade nickel. It's like, even if you remove this would be a great intercept. If you remove the nickel, it would be a great intercept. If you remove the nickel and the platinum, palladium, and gold, it would be a great intercept. And which is not a shock really, is that the market didn't care. And this comes from these hits are what? I mean, this is 100 feet. These are bonanza grades, really close to surface, in an almost fully permitted deposit. It's not that it's a new discovery, it's not that it's basically adds a ton of expansion to the project, but it's like, you don't need a lot of this. You don't need a lot of tonnage to have this worth quite a bit. And especially given that Magna is trading at like 70 million or something. It is just absolutely incredible how poor the sector sentiment is. These holes are screamers in perhaps the most advanced junior mining project in North America, located in Sudbury, next to smelters and mills. This is gonna be monetized one day. The market didn't really give any type of monetization value on this news. Is that frustrating? Yeah, I can see that's frustrating. But at the same time, it's like, is that good or bad? Again, it's like, is a depressed sentiment good or bad? Well, compared to yesterday, if someone buys shares of Magna at today's price, which is basically unchanged, he gets more implied metal. He gets more value because the price didn't change and the value went up. That is why yes, it's kind of rigged against us, but as a holder, but as a buyer, I mean, we get to see the cards. Imagine it's like if you knew hits like this were gonna come out, and you bought before that, you wouldn't even get paid, because there's no reaction in this market. There are nobody cares right now. In a hotter sentiment environment, or when this gets monetized, sentiment today doesn't change the fact that these are bonanza grade hits in a very de-risked project in the best location you can ask for, helmed by pretty much the best team you could want. That's what I'm talking about when I say it's like this sector is not really that hard. It's just that it's so extremely irrational and chaotic that you can't really see any patterns. So, for example, this one's like, oh, they put out that. Well, you would think that's like holders should get rewarded. Not in this environment. Not right now. Not given the state of the marginal investor right now. Does that mean you're never gonna get paid? No, it means gratification is delayed. But it also means, again, when you see juniors out there, they're putting out good news, you get nothing for it. You're able to buy ownership of these increasingly valuable assets without paying up. It's like somebody offered you a whatever car at some price yesterday. Today you get offered at the same price, same car, but it now also has a turbo function or whatever. Is that good or bad? Well, for the holder of the car who bought the previous one, he doesn't feel too good. But as a buyer, I mean, and since I'm pretty much always all in, all I have is like value shuffling. Look what car is getting better and better without price increasing, or where the car is the same and the price has decreased. A buy can come in many forms, like price decline without any destruction of value, or value creation without any increase in price. Both change the price to value gaps. So if you looked at the share price, nothing at all happened here. These didn't change or add any kind of value. I would beg to differ. So basically, if you can have a firm grasp of the obvious, this sector really isn't that hard. It's just that if you're smart, quote smart, the smart decision and the payoff on the smart decision might be months or years apart. And if you believe the bullshit that Mr. Market is spewing all the time, you'll sell out, let's say. I mean, take this for example, or take these for example. Let's say I held these. Let's say they had already made the discovery, but it's like maybe the stock had, actually in these cases, the stocks, I think, moved. I don't even really know why Wildcat is up, to be honest. But let's theory craft. It's like you bought these at, I bought it at whatever. Let's say I bought Wildcat at 10 cents, Chalice at 14, Great Bear around 38. But nothing happened. I thought they were cheap. The market is giving me no credit. I don't look smart. Finally, I throw in the towel because, I guess I'm wrong, because the market is not saying that these are worth anything, or anything has changed, yada yada. Well, you don't know. Maybe just around the corner, 1 year later, people all of a sudden see what you saw. They would agree with you. It's like what Buffett says. You want people to agree with you later. I think this added some value to Magna. The market today says it didn't change anything. But it might agree with this additional value someday. And in that case, when they finally agree with you, then you get paid for disagreeing with them now, disagreeing with Mr. Market. District Metals. District and Boliden Joint Technical Committee approved 2024 exploration budget on the Tom Tebow and Stolberg properties and commenced drilling at the Tom Tebow property in Sweden. So this used to be the main course. Now it's more about uranium. And again, it's like District today. I think District is down. I mean, is this materially shocking news? No, it really isn't. But it's proof that, okay, things are happening. And what is interesting... can I zoom out? Let's see. So this is the Tom Tebow, let's say the 2024 work plan. These are drill holes from 2021, 2022 done by District Metals. Note, I mean, these are some, not all, but like some of the planned holes are pretty nice step outs. This is, I mean, okay, from here it might be, let's say 200 meters. There's one hole here, but there's, a few over here, and there's a decent spread. Let's put it like that. And they're gonna do some surveying, or what do they call it? The planned core drill program for the Tom Tebow property comprises 2,250 meters in 6 to 8 drill holes. Will be followed up by Boliden's in-house state-of-the-art downhole 3-component electromagnetic DHEM survey. These are the experts at these kinds of deposits in the Bergslagen region. They have the Garpenberg, which is a massive tier 1 asset, world-class asset, that was almost shut down, but they threw a Hail Mary drill hole headed by I'm trying to remember. I met him, a really nice guy. I forget now, but he was working for Boliden at the time, and I think he still is at least a technical advisor for District Metals. I can't remember the name. Anyway, so they're very good at this. If there is mineralization here, or big mineralization, let's say, they are the best at finding it. They have their own proprietary technology. So we get a big value add just simply from partnering up with Boliden, because they are the best explorers for these kinds of systems in this region. So I don't know what the results are going to be or anything like that, but I know that District has 30 million market cap, Canadian, and we don't know what's going to happen with the uranium properties, but Boliden wouldn't partner with District Metals and give District Metals parts of the Stolberg property as well. I mean, or let's just put it like this. I don't remember how much we will keep. I think it's like 15% of the total cake, both Tom Tebow and Stolberg. 15% of a Boliden-sized project or projects is probably worth a lot, and probably would get bought out sooner or later by Boliden, I would think. So this could obviously have some material impact to the the value of District Metals, and again we also have the uranium, which is like the I guess the main driver right now for the share price, because the market can only focus on one thing at any point in time. But that doesn't mean that this is not value accretive. I mean, if they prove up something, or they find something, discover something that's material, and uranium, let's say they get a go-ahead from uranium, whatever. I mean, this could, let's say, be spun out. Or, I mean, the base metal part of District Metals I find very attractive. It's in itself, because they have the Svärdsjö property as well. They have the Gruvberget property as well. I think that's the three big ones. Yeah, they are certainly worth something, and their uranium optionality play is certainly worth something. All that right now is being sold for 30 million. Is that expensive or cheap? I mean, I would say it's one of those somewhat high risk, high reward scenarios, where it's like the uranium could be a total game changer in the eyes of the market. All of a sudden, you have like the second largest uranium deposit, and it's like it's at least legal to go drilling and mining uranium in Sweden from a state perspective. That's obviously a big game changer. But there's also like a future where it's like Stolberget and Tom Tebow turns out to something significant, and it's going to be worth more than 30 million. The market cap of District Metals today. So it's like I have no problem, even though the market doesn't give multi-asset companies any value for anything but the flagship project. Again, the one thing that the market focuses on. Still, it's good to have, because if you have a few aces up your sleeve, let's say, even if some fail, you could still come out with a win because plan B worked instead of plan A, etc. So it gives you diversification to the upside and as well to the downside. That's what I like about that. Fathom Nickel announces closing of its second and final tranche of private placement. They are drilling right now at Albert Lake. I think they have probably completed at least one hole. This is a high risk, high reward story. I mean, they own two, especially one enormous property in Canada. Well, two basically, nickel district plays. We know there's nickel at Gochagger. There's a, historic resource. They've hit high grade nickel there. Now they're drilling more I guess even higher risk. But yes, there's nickel up there because it's the old Rottenstone mine, which was a small but very high grade nickel, platinum, palladium mine. So they are drilling Albert Lake, the biggest project right now, and they're putting in several holes, testing different targets. As always, it's like, what's the chance of success here? What's the chance of making a discovery intercept, making a new discovery at Albert Lake in this drill campaign? I have no idea. The good thing about nickel sulfide exploration is that if things align, let's say, geophysics seem to work pretty well, and they can use the borehole survey, which is basically nicknamed the ore finder. So if they were close, they should be able to locate it relatively quickly, etc., etc. So I like nickel sulfide exploration because it's I'm not gonna say straightforward, but it's like somewhat easy to do grassroots exploration, simply because geophysics seem to work relatively well, unlike a lot of other deposit types. That I like. Okay, it's at 20 million market cap. I don't think that includes the recently closed private placement, which I participated in as well. So let's say it's at 25 million market cap Canadian. Given what they have already, meaning like Gochagger, is that cheap or expensive? I mean, maybe. Do they have a mine at Gochagger already? I mean, that depends on the nickel price and all that. Is that what we're here for? The current or historic resource and the hits they had so far? No, I mean we're kinda, in my opinion, looking for a home run. It's like a new high grade nickel sulfide discovery. So it's okay, 25 million Canadian. It's pricing in, let's say, 10% chance of finding something worth 250 million, and we know how valuable a real significant nickel sulfide discovery can be. I mean, I've shown this before. This is from Mining Visuals and Gold Discovery. Top stock winner 6 months post discovery hole. I mean, I probably pointed this out before. Serious Resources with Nova, 3,417% appreciation within the first 6 months. Nickel discovery. Discovery hole was 3.8% nickel, 1.42% copper over 4 meters. That obviously doesn't make a deposit, one hole, but this was the discovery hole. 6 months later, it was up 3,417%. I don't know what the market cap was exactly, but this is kind of highlighting this slide as well, which is from Prospector Metals or Minerals, who have staked, they kind of changed their course a bit and are looking for sulfide nickel in, I think it's Canada. Okay, so why sulfide nickel? Very high value per ton. Right? I mean, it's like a high grade gold intercept. It's like it's valuable ore if you find one. Deposits commonly cluster. One discovery equals district becomes more attractive. Okay. Fathom is obviously on top of this, given that they have, especially Albert Lake is absolutely huge. And Gochagger is large as well. And they staked around. I mean, over the last, what is it, a year, 1-2 years, they've added ground to both, I think both projects. So they're obviously very much aware that like, if you find one of these, they can show up in kind of district clusters. You find several pods, let's say. You don't want to find one pod, kind of confirm this could be a nickel district, and then it's like, oh, we don't own the actual district. We own one pod. That might be, let's say a company maker or not, but still, you would want, and especially for an acquirer, because they're going to be paying up for blue sky as well. Up front. That's what major companies tend to want to see. They want to feel like they're buying potentially double what they paid for, if you know what I mean. The idea of that, yes, this could be a, let's say, they know there's some, or they think there's a mine there, but it's like, well, we think, okay, we're going to pay some for the blue sky because we think there's a chance this could be double in size down the road, something like that. And there's obviously very famous, like, huge nickel districts, like, I mean, Sudbury has, as Magna is showing, that there's several great, absolute world-class nickel mines have been discovered in that area, not just one. Norilsk, I think, is a huge complex as well. So, I mean, they are thinking from the end, and it's like, set them up, let's say Fathom has set themselves up to, like, if they have success, it could be wildly successful. Because they will at least own pretty much the entire district or cluster, if there is one. Small footprint, typically underground, low environmental impact, smelting is exothermic. This, I guess, I mean, they ship it to smelters, but it's like typically underground, good for ESG reasons. Low environmental impact if it's underground, obviously. And this one's like many sulfide nickel deposit discovered suddenly rather than evolving, like many lode AU or CU deposit. And this is what I've been talking about a lot, and I talked about this with like Condor, for example. One of the main attractions there is like, if they hit, that blue sky case could theoretically be proven up within 6 months. Nickel seems to be also, and here we have like an example like Piorina, that's high sulfidation. But if we go to nickel, we have Sirius here. We have Chalice Mining, which is in the third place. So top 3, 2 of them are nickel sulfide discoveries. And then we have Voisey's Bay here at number 6. So like, what's that? 3 out of the top 6 quickest revaluation stories were nickel sulfide discoveries. That perfectly lines up with this. And you can even look, let's say Great Bear. I mean, it took them 3-4 years to prop the blue sky, and the blue sky wasn't even, I was gonna, or let's put it like this. And not only are these huge numbers, but they're quick. This is the 6 months. You would be happy if it took 10 years to get the 1,000%. That's the idea. So it's like, if we would be so lucky that Fathom actually has a nickel pod, a good nickel pod or 2 or more, and they actually hit that anytime soon, there's potential for it to go up a lot. But again, that's still potential. it might be cheap if there's 90% chance of failure. It might still be cheap today, and it doesn't also mean it doesn't mean that you have to be in before they make the discovery, otherwise you're not going to make any. No, if they make a discovery hole and you pay up 100%, that's pretty. It's like that. If it ends up being a big discovery, you're gonna end up making a lot as well. So it's like, from again a risk perspective, it's much lower risk to buy in after a discovery hole, for example, whereas like the chance of success might go from, I don't know, 5% or 10% to like 20-30%. That could be huge. If you pay up 100%, that might be more than worth it. And I have warrants as well, which is like, if you have warrants, since they have some kind of I was gonna say half-life, but it's like, okay, 2-year warrants. You would obviously want the highest potential return within those two years. If it's a very, very slow growth case, I mean, 2 years might be too low. I mean, now I can't come up with a good example, but the idea is like, you want like drastic changes quickly, well within the time frame, whatever. But I have Fathom as well in some of the hodl folios. But again, it's like, this is high risk stuff. This is high risk stuff. You only need one success, like let's say a Fathom makes a discovery, and it would pay for several. So even if you have a small position, let's say, you kind of you are aware of the fact that, well, odds are it's not going to be a massive success, because that's just exploration for you. It's not that easy to make a significant discovery. But let's say you're like, okay, I know there's like, let's say 80% chance of failure. I'm just making up numbers now, but it's like, okay, I'm okay with having what, like 2% exposure in portfolio, and I'm okay with it's like a high likelihood of going down 50% to 70%, something like that. I mean, it doesn't take anything away from Gold Chagger if they drill dusters here, but the market is gonna, I mean, the first reaction is gonna be wild regardless. But just to make an example, it's like, but if we would be so lucky that they would make a discovery, and it ends up being a significant discovery, within a year or two, that small position, I mean, obviously, if you look at some of the numbers here, I mean, some would go absolutely crazy. Let's say you have I don't know, $100,000 portfolio, is like $2,000 in Fathom. It goes up 15 times over the next 2 years. I mean, that's 1/3 of your, or almost 1/3 of your current portfolio. So I mean, you don't need a lot in these kind of high risk, high reward cases for it to play out, but you still don't. And I know it's very attractive. So it's like, oh, I mean, if I take a huge position, it's like, if they find something, on par with Julie Moore or Nova, all my problems will go away. It's like, yeah, but we're not really in that environment right now anyway, because beta is so cheap. But yeah, so I mean, I like it from again. If I want to play high risk, high reward stories, I prefer the ones where it's like, if I had to choose, if the reward side takes 4 years, I would rather go with the reward side taking half that, or 1 year, or something like that, since I'm already taking the risk. That's why I like Snowline so much, because that was one of those types of deposits where, if we're fortunate enough there's success here, there is something significant, it's not going to take 3 to 5 years to prove that up. It might take 1 or 2 additional drill campaigns or something for us to have a pretty good idea what they actually have. You cannot say the same, as they point out here, with a lot of load gold or load copper deposits, whereas like, if they drill 50 holes, yeah, you might know they have something that's like, oh, we can see something at least, but it's like, you might need, I don't know, 400 holes. I mean, Great Bear drilled hundreds of thousands of meters to show what, to get in the ballpark of like, yeah, they probably have 6 million ounces. That took a lot of rigs, hundreds of thousands of drill meters. That's not necessarily the case with some of these nickel sulfide discoveries. That's one thing I'd like. But it doesn't mean it's low risk. It just means that yes, it's high risk, high reward, and the high reward can come quicker relative to most other deposit types. That's one thing I like. Yeah, that's about it. I think I might cover this. Well, I should go over this in a different video, I think. But just cliff notes basically. I'm looking at private placements with warrants right now, because again that skews the reward function of it. So it's like I can accept more risk if I get warrants. I need to be have an even lower hit rate if I get warrants, because I need fewer. The ones that work out are gonna pay for even more of the ones that don't. As always, just because this sector is dirt cheap doesn't mean you're gonna get paid immediately. And if you forget that, you might end up like me in some cases, where I thought I bought it cheap, sold out way too early, couldn't wait, bought low, not enough patience, no hodl, no glory. So if you're, and it's easy when you think about it, and Rick Rule explains that even if some of these stocks that are really cheap now, and they, let's say, have proven results, proven resources, I was going to say, even if it takes a few years for them to go up several hundred of percent, that would obviously still be worth it. And it could start at any point in time. That's the thing. There's no guarantee it's going to take 2 years. It could take 2 years. It could take 3 years. Who knows? But it could also be starting tomorrow. That's the thing. So when you think about it from a compounding perspective, even if it takes 3 years, even if it takes 5 years, it would still be massively outperforming the typical stock market return. That's why it's like, in my opinion, I've said this a bunch of times before, we are way past the point of even thinking about selling. If you want to need a low hit rate, buy cheap. It is cheap. If you want margin of safety, buy cheap. It is cheap. They have margin of safety. Yada, yada, yada. Yeah, and then some other stuff I'm looking. I prefer, if I'm going to take pure beta exposure, even though the thing is that gold is typically, I mean, there are gold deposits out there that are trading for nothing almost, and they actually work well at these prices. There are not many developed silver stories that work well at these silver prices. But I gotta say, when it comes to beta, nothing really beats silver. So it's like, if you want pure torque, it's still, kind of silver to go, but I think the higher quality companies, and where you actually have margin of safety, that's in the gold place. So a smarter investor than me, let's say, or a speculator in this case, should probably go for gold beta. That's kind of what I'm doing in most of the hodl portfolios. But since I'm a bit greedy, I have more in, more, I'm not going to say I don't have a lot in either, but I am dabbling into some of the silver beta plays actually. And that's probably not going to make up more than 1-2% of my portfolio anyway, so it's not a big deal. I look forward to the rush, and I've seen it before where these silver juniors just gets lit on fire and just keeps moving up. Anyway, that's it for now, I think. Can cover this in another video. Consider me biased. I own shares of Magna Mining, District Metals, and Fathom. All three are sponsors, so I'm twice biased. And I mean, don't risk any money you cannot afford to lose. That's it. I mean, just to sum up, it's like, I think Magna is a low risk. There I think a return is a matter of when, not if. District Metals is a unique one given the uranium angle. partnered with Boliden, so it's like high quality story. You get both base metals and uranium optionality, or option on option uranium optionality actually. And Fathom is the highest risk of the three, and I think that it's like, typically when I think about position sizing, it's the margin of safety that dictates it more than anything else. And I'm aware that it's like, hey, uh, uh, I was gonna say success is the exception. So I wouldn't. I don't know what the chance of success is for Fathom. I mean, in my mind, I'm thinking like maybe 20 to 30% that they're actually gonna snag something in this drill campaign. So I wouldn't be shocked at all if they don't make a discovery hole. If they do make a discovery hole, it could get really fun really quick. That's it. So it's like, it's easy again. It's easy to get greedy. Because you're thinking that, well, hey, if these only hit, I mean, it could save the entire portfolio, whatever. But again, it's like, you don't want to go, you don't want to go all in to a high risk, high reward story, especially where we are in the market. That's what I'm saying. Fathom, if they completely fail, or if they, I'm not gonna say if they completely fail because they're drilling Albert Lake. But if Albert Lake, this maiden drill campaign at Albert Lake completely fails, that's not going to kill my portfolio. If they have success, could help, the portfolio out a lot. That's it. Not investing advice. Again, consider me biased. Don't risk money you cannot afford to lose. And thanks for listening. Bye.